Most traders think scalping the 1-minute chart is chaotic, noisy, and impossible to trade consistently. That's only true if you're using the wrong settings. Let me show you how scalping with SwiftAlgo is actually meant to be done. First, open the market you want to trade. This works on Forex, indices, crypto, it doesn't matter. Now choose your time frame. If you want fast in and out trades, go with the 1-minute chart. Once the chart is open, add the SwiftAlgo indicator. Right away, you'll see buy and sell signals appearing. But before taking any trades, the most important part is setting it up correctly. Even though we're trading on the 1-minute chart, we don't want the indicator reacting to every tiny price movement. That's why for 1-minute scalping, the best approach is to use a higher time frame sensitivity. A 5-minute to 15-minute sensitivity range works best. This filters out noise and keeps the signals aligned with the bigger picture. Next, decide how you want to trade. If you want more trades with a higher win rate, use a 1-to-1 risk to reward. If you want fewer trades but larger profits per trade, use 1-to-2. On the 1-minute time frame, many scalpers prefer 1-to-1, especially when consistency is the goal. Now look at the backtesting dashboard in the top right. This is where SwiftAlgo separates itself from everything else. The indicator automatically analyzes real market data and finds the best performing settings for the current conditions. You'll see your current setting win rate and the backtest setting win rate. If the backtest win rate is higher, that means better settings are available. All you need to do is simple. Copy the multiplier and period shown in the dashboard. Paste them into the indicator settings. Click OK and let the indicator update. Once both win rates match, you're fully optimized. No guessing, no manual testing. Now the fun part. Here's a long trade example. A buy signal appears, the market is moving cleanly, and the setup aligns with our settings. We enter the trade, risk is defined, and price quickly pushes into profit. Here's a short trade example. A sell signal prints, momentum is clear, and price moves exactly as expected into the target. Scalping with SwiftAlgo is about speed, clarity, and structure, not overthinking. Market conditions change constantly, especially on lower time frames. That's why settings shouldn't be set and forget. For 1-minute trading, it's best to update settings once per day, ideally before your trading session starts. A common myth is that the 1-minute time frame performs worse. That's not true. The indicator works just as reliably on lower time frames. The only difference is signal frequency, not quality. As long as you use the right sensitivity, follow the dashboard. Control risk, scalping becomes structured and repeatable. Now, before wrapping this up, there are a few common mistakes you need to avoid when scalping with SwiftAlgo. The first mistake is taking every signal. Just because a signal appears doesn't mean you have to trade it. If the market is clearly choppy or volatility is extremely low, it's often better to wait. SwiftAlgo works best when price is actually moving. The second mistake is not respecting your risk to reward. Many traders enter correctly, but then manually close trades early or move stops out of fear. If you choose 1-to-1 or 1-to-2 risk to reward, stick to it. The edge of the system comes from letting the math play out over multiple trades. Another big mistake is not updating settings regularly. Markets don't stay the same all day. If you're trading the 1-minute time frame and still using settings from yesterday, you're trading outdated data. Updating once per day keeps your edge sharp. Overtrading is one of the fastest ways to give profits back. Scalping rewards precision, not volume. If you've enjoyed this guide on how to properly scalp with SwiftAlgo, make sure to leave a massive thumbs up. On this channel, you'll find guides, strategies, tips, common mistakes, and more. So hit the subscribe button to not miss anything, and I'll see you in the next one.